Good morning. This is Chris Robinson, Robinson Ag Marketing, with the pre-opening comments for the grains overnight. Uh, Corn down a penny, beans down 2 pennies, wheat anywhere down from a half cent to a penny. Kansas City wheat is the only green on the screen for the grains. It's up about 2 cents. So Kansas City's trying to hold in there. Spot corn, I'd be watching today. We traded to 390 overnight. If we take out 387, that opens the door up to the next old low, which is 377. December corn last night traded the 410 and a half. Again, if we take out 407 and a half, that opens up the door to more selling. It is the last day of the month. Um, it's not a Friday. If it was a Friday and the last day of the month, I'd expect even more. But my guess is that they'll continue to lean into the positions they have right now. November beans 993 and a quarter last night. August beans 967 and three quarters. We talked about August beans. They're on a 7 month low. November beans, 993 opens the door to 84. The low of the April tariff swoon was 970. That's probably the next downside risk for beans. So if you're asking me, how much lower can we slide? I'd just say that you start with looking at what the old lows are. Defend, defend, defend. If you don't have hedges on, get some hedges on. The next hurdle is the August 12th USDA crop report. It could be bullish. You never know. I mean, it's typically what happens, right? The whole herd is expecting bad news, bad news, bad news. So I'm not saying we can't get something bullish. I'm not in that camp. But what I want to do is defend what we can, because this is starting to feel like the old story where you put a um, you put a frog, in a pan of water, and turn it up slowly, 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 slowly. That's really what this market looks like to me. It's a grinding lower market, which is very, very, very difficult to trade. If you're a producer, it's very difficult to sit through. I get it. I understand it. There are still some strategies we can use to, stem the tide. That's really what we're doing. Now, look, moving over to the livestock. Highs yesterday. We'll see. Will that continue to go overnight? The stock market was higher again. Even though we had a little blip after the Fed's decision to not cut rates, the stock market basically is hanging in there at all-time highs. So there's a big correlation between cattle and stock market. You put those two charts up together, sometimes they look like mirror images. So August fat cattle today, yesterday's high was 233 and three quarters. My guess is if we take out 234, it opens up the door to 242, 246. August feeders traded up to 339.70. If we trade through 340, that opens up the door to 346 as well. And again, these are just progressions that technical traders look at. They're not promises, but we've seen that. This has been an incredible, really kind of an unprecedented, I wouldn't say kind of, an unprecedented move in feeder cattle. I mean, I'm looking at feeder cattle right now. On June 24th, 6 weeks ago, we were at $3, and now we're at 338. It's just incredible. So we're overdue for a correction. I mean, we just rallied $38. Half of that, right? We could give half of that back and still be in good shape. So we could dip back to heck. We could dip back down to like 315, and that would be a healthy correction. So if you care about the revenue, defend the revenue. Yesterday I was rolling up puts in feeder cattle. I was paying $1 and going up $20. I can't remember the last time I was doing that. That's just crazy. That's how much these options have played a role in our risk management. So usually we'll roll them up 4 to 1. If you spend $1 and go 4 or 5. But yeah, I had some positions on where we left it alone, and sure enough, we were able to go up, I think, $16, $20 for a one lot. So that's something to continue to watch. And I would be looking at defending whatever is going on here in the lean hogs. Lean hog Feb's kind of hanging fire. Feb, if we don't make a new run up above 85, 86 cents, we could slip back down to where we were in that last correction. It was a pretty key technical correction. So defend this rally. It's Friday. My guess is that they're going to dress up their positions. And when I mean they, I'm talking about the managed funds. We do not have any weather news. We do not have any trade news yet out of China. That's possibly, the one saving grace that we're all continuing to look for. He just signed a big deal with the EU, and that's great, but we need to sign a big deal with China. So that's it. This is Chris Robinson, Robinson Ag Marketing. If you need help, give me a call. 302-638-8868. Have a great day.